over 95% of traders are never ever profitable in their lives, even after 3 years, 4 years, 5 years, 6 years plus of trading. But I've been able to gain profitability within only 3+ years. And I'm going to show you exactly the methods that I used, because I've used it recently and I know it works, because I've become fully rich just from using these strategies. And you're going to see exactly how I actually trade in live time, right? So we're going to be trading the Judas Swing Strategy today, and I'm going to show you exactly how you can print money with the strategy, right? So you're going to be trading within a 12 a.m. to 5 a.m. London session kill zone. It's going to be UTC -4. That's the actual time frame that I'm going to be using right here. That's the time session in New York. And as you can see, the first things we need to do is mark out the highs and the lows of Asian session, right? As you can see, Asian session is right here. If you want this indicator, comment down below. It marks out your Asian session, London session, and New York session. Just comment down below and I'll send it to you for free. So what you need to do first is mark out your highest point and the lowest point, right? So I'm gonna make sure I actually have this in the dashed line. So this is the highs range, and I'm going to be marking out my lows range too. As you can see right here, this is my lows range, right? And as soon as I have the highs and the lows range marked out, what I need to do becomes very, very clear, because all you've got to do is mark out your 12 a.m. Judas swing candle, which actually happens at 12 a.m. on the dot, right? If you want to change your actual session right here, you can change it and figure out which time it would be for your actual time zone, right? So this is 12 a.m. right here, and this is the candle that is at 12 a.m. So what we need to do with this candle is also mark this candle out, because this candle is the most important one. This would be our 12 a.m. Judas candle, right? Very, very simple, very, very direct, right? As soon as we get the 12 a.m. Judas candle, what we've got to do now is wait for the fake out to actually happen before we actually figure out which side we're going to be taking pricing, right? As you can see right here, it just says vibration of structure, fractional highs, but you first have to wait for the actual Judas swing to happen, right? So what you need to do is wait for the first fake out. So it will actually, this is going to be exaggerated, but it will give us a fake out like this, and then it will go towards the downside, right? So that's exactly what we're looking for right now. And we need to fake out to actually take out the 12 a.m. Judas candle, and as you can see right there, it's completely taking it out, faking out all the retail normal traders that would have already been entering right here, and as price goes towards the downside, they all would have been stopped out. Okay, everyone would have gotten stop lost, and everyone would have been out of the trade by now, which is very, very good towards us, because now we know we can easily take the trade towards the upside, because there'll be so much buying pressure, right? So as soon as actual the swing happens, so I'm going to keep playing price forward until the swing finishes. As you can see, it's still going right there, and the swing actually just finished, right? So all of this right here, all of this area that I'm going to mark out now will actually be the Judas swing, right? As you can see from here to here, all of this area is actual the Judas swing. And what we need to do from here, let me just mark it out, JS. And what we need to do after we have our Judas swing zone marked out, we need to make sure we find a breakage of structure where fractional highs and lows have been swept. Okay, not and lows, all lows have been swept, and then we reinforce our market structure shift with an engulfing candlestick if it's possible, right? So what we're doing now is looking to actually get an engulfing candlestick towards the upside where fractional highs / fractional lows have completely been taken out. So if I do keep playing price forward, as you can see, we're going to keep playing it until we get a very, very good position. And there we go. We just got a very, very amazing candle right there, right? So it's a very good candle with a lot of actual volatility right here. And as you can see, this is the fractional high. I'm going to explain what a fractional high later on, what a fractional high actually is and how you can identify it. But for now, this is the fractional high, and this is our market structure shift. And as soon as we get a market structure shift, what we need to do is make sure we identify the fair value gap and we overlap it with the market structure shift to get a higher probability, and then we can execute the trade. So this area right here is our market structure shift, and as soon as we get it, this is our fair value gap, right? So fair value gap is the same thing as an inefficiency candle, right? It's the same exact thing. As soon as we get the fair value gap, all you've got to do is literally enter off of the fair value gap line, placing your stop loss just below the fair value gap area right here. And there's two things you can do. You can either put your stop loss and take profit at 1 to 3 risk reward ratio, or you can actually put your take profit at Asian sessions highs. But as you can see, the Asian sessions highs range is very, very far out, which we're not going to be risking all them pips because the trade will be absolutely insane, right? So if I was to actually drag this all the way up, this would be a 1 to 22 trade, right? That's insane. So we're not going to actually do that. We're going to just wait for the 1 to 3, or I'll do a 1 to 4 actually, because I do believe price will go up to completely smash that. So I'm going to be there now, play price forward. We're going to wait for price to actually enter. As you can see, it's entered our fair value gap, and now it's going to go towards the upside where it goes up and completely smashes take profit. As you can see, it's entered twice in our fair value gap, which is not a problem at all because this Judas Swing strategy has so much structure to it, which just adds on more confluence and adds on more reinforcement that our trade will actually hit take profit. And it's very, very good because you don't have to trade within emotions, you trade with an amazing strategy, and the risk management for the strategy is absolutely amazing, right? If you were to trade this every single day for 5 days of the week, you would at least hit 3 trades. And as you can see, the risk management there is insane because every trade is at least 1 to 3. So let's say you hit 3 trades, you would have made 9%, and if you missed 2 trades, then it's 9% minus 2%, you know what I mean? So it's very, very easy to actually make profits within the strategy, right? So I'm going to be showing you on a fundamental level how the strategy actually works on a very, very simple level, so you do get an understanding, and I'm going to explain what fractional high actually is. But just before that, if you're a serious trader and you want me to personally help you pass your prop firm account, and actually you want me to manage it, getting you profits on profits, payouts on payouts, and I only take 20%, click the first link in the description and I'll get you started on that program straight away. Just join the Telegram first link and I'll get you started. But anyway, what we're going to be doing is waiting for price to actually do its thing. This is going to be our Asian session. We're going to wait for it to do its thing, but once it gets to our specific time frame, you need to mark out the highs and the lows, and you need to mark out your 12 a.m. line, right? So this is our 12 a.m. kill zone. So Judas candle, 12 a.m. Judas candle, and what we're going to be doing, this is Asian highs range, and this down here will be our Asian lows range. So Asian lows range, right? And as soon as we get an Asian highs range and an Asian lows range, what we need to do now is wait for price to give us that fake out towards one of these two areas. Let's say it gave us a fake out towards the downside, right? So let's say price actually went up into the area. So for example, say it gave us one of these. Actually, let's say it gave us one of the ones at the bottom where price actually goes up into the area, giving us that confirmation, and then it goes towards the downside, giving us that crazy fake out, and then it goes up and completely sweeps the Asian sessions highs, right? Once the Asian highs get swept, all we need to do from here on out becomes very, very crucial, because now we know the fake out has already happened. So all the retail traders have already been gone in stop loss because they all tried to sell once they seen price go towards the downside right here. They all tried to sell, but they didn't actually, get the memo. They don't know the strategy as well as me and you actually do, which means we can actually make so much profits, right? Now all we're waiting for is the actual market structure shift, right? So we're waiting for the market structure shift to actually give us that candle right there. This would be the market structure shift right here. And as soon as we get a market structure shift, all you've got to do from here on out is mark out your fair value gap. So the fair value gap usually overlaps the market structure shift right here. Fair value gap. And as soon as we get the fair value gap, now we just need to actually short position this, alright? So you just short position this right here, placing the stop loss just a few pips above the fair value gap. We don't want to compress it too much, and we can actually put our take profit at Asian lows range, right? Because it is very close towards the downside. It's only a 1 to 7 trade, and that's very, very easy. With this strategy, you can go all the way up to a 1 to 15 risk to reward ratio trade, and it's very, very easy to actually hit take profit on this strategy, right? So as soon as that's done, all you've got to do now is wait for price to actually hit your fair value gap and go down completely, smash take profit. Just before I show you the rest of that, let me show you exactly how you can identify a fractional low, right? So let's say we want to identify a fractional low. Fractional low is a series of 3 candles where the candle in the middle is actually the lowest one, right? So it doesn't matter about that candle body, it only matters about the candle wick. That's exactly what we're looking for, just the wick, right? So let's say the wicks were like this, like this, and like this. As you can see, the candle in the middle is the one that is the lowest, and this would be our fractional low, and this is what we'd be using as our market structure shift, right? And that's exactly how I identified this right here. Let me just go down and show you exactly how I identified this market structure shift. It is just the opposite way around. So fractional high is the same thing. It is the candle with the highest wick. It doesn't matter about the body. It is the candle in the middle, and it's not the candle right before the one that we are marking out, right? So it's very, very easy and very, very simple. And let me show you another actual guideline that you need to use to make sure that this is your fractional low. So let's say another candle was like this, and then we had another candle that actually came over like this, right? So let's say this was the last candle, and that is where it actually meets with this candle right here, and that is where our market structure shift would be, right? So it's very, very easy, very, very simple. Let me just change this over so you know exactly what I'm talking about. As you can see, these two meet, and yeah, that's very good. So as you can see right there, price actually gives us that sweepage, and this is exactly how you figure out your market structure shifts, right? So as soon as that's done, all you've got to do now is wait for price to actually go back into the fair value gap area. Let's say it just enters right there, maybe with 1 pip, and then it goes up, goes down to completely smash your take profit. Let me just extend this right here, and you're gonna see exactly how it maybe goes, dips down, but then it will go all the way and completely smash your take profit. This Judas Swing strategy that I've developed with ICT works amazingly, and it works every single day. And if you do actually get this from my videos, make sure you do comment down below if you do like the Judas Swing, and if you want me to make more videos on this instead of the silver bullet. But anyway guys, thanks for watching. I'll see you in the next one. Bye.